And I know that yesterday you were saying you were pretty positive for this week, for the near term around stocks. So were you surprised are you surprised at global stock resilience? I know US stocks fell briefly yesterday, or fell yesterday into the close. But we have seen a sort of resilience through the Asia session. Is there anything about that surprises you?
I think even though I was bullish for this week, I was slightly surprised by how quickly Korean stocks really surged today. Japanese stocks held up. They thought they might be in the firing line in the short term. But I think the overall backdrop is kind of what we talked about yesterday, is the idea that the recent news flow has been exceptionally positive. We have this big fiscal tailwind, not just from the big beautiful bill out of the US, but obviously NATO defense spending as well. We've had really good recent macro data out of the US and out of China as well, and generally the data has held up quite well, much better than people were thinking even only 2 months ago. The consensus forecast for GDP growth around the world are getting raised again after falling into May because people are expecting that tariff damage to come through quicker. So I think that the overall short-term story is very good. And then the latest news flow, that the bigger picture on tariffs is that the deadline has been delayed again. And we've got, yes, prolonged uncertainty, but it's not this kind of sudden shock about to happen on Wednesday. So the short-term news flow is very good. Now, it's really important to emphasize, even though yesterday I was talking about being bullish, I was talking about bullish on Friday, I think that we get the short term, we have higher levels to go in stocks, in US stocks, in global stocks. I do think that ultimately tariffs are going to be very damaging for the US economy. They're going to be damaged for global economy. And I think the policy uncertainty is very poor for US companies. But I think it's a really slow moving story because there's so much uncertainty around it. So short term, remain positive on US stocks. Longer term, continue to think US stocks will suffer from high valuations and the fact that there's so much policy uncertainty that will continue to be ongoing and a higher cost of business.
Mark, I'm going to ask you kind of the same question we talked about yesterday. I was really surprised to see the U.S. dollar strength yesterday around these tariff announcements. What did you take away from that?
I think that was just a positioning squeeze in the short term. We had, that little bit of a shock of like, oh my God, we got really high levels again. I think some people have been betting that the new tariff levels might be massively reduced from April 2nd, and that wasn't clearly the case. So I think the short term reaction was that the market, just cut back in some positioning, and they were short the dollar. So therefore, there's a little bit of a dollar squeeze. I think that, look, as you know, I very deeply believe that dollar depreciation has a lot further to go in the next couple of years. I think, short term, I'd still even favor a little bit of dollar downside. It's going to get more complicated because people are starting to trade the inflationary impact of tariffs, and you're starting to see higher yields, particularly US higher yields. So that's going to make it a little bit harder for the dollar downtrend from here. But longer term, absolutely, dollar is much more to decline.
Mark, EMFX has always been your crowning jewel in your brain. Talk to us a little bit about the ripple effect here. Jeff Yu was just making the point that perhaps the tariff risk on Latin America is eliminating the appeal of the carry trade. What's your take?
I don't think so. I think the EM story is still overall very good. One of the main reasons I think that is because I have conviction in the dollar depreciation trend. And as the dollar falls, that it continues to increase the attractiveness of EM trades. It's an easing of financial conditions. It's an easing of an external debt. And simply it improves the foreign currency returns of these investments, making the diversification trade more appealing over time. And that's a longer moving thing. I think short term, it does look like EM is in the firing line for Trump's ire and therefore the most focus of tariffs. But I think these will be dips that will be bought into investors as they continue to go back to these EM trades that were abandoned for so many years.